What is up, everyone? Welcome. Today is March 19th, 2023. And boy, does it certainly feel like more than 9 days has passed since the last live stream. Thanks so much for tuning in. I know it's a Sunday. I know these things usually happen on a Friday, but I was a little busy. I appreciate you taking some time out of your weekend to tune in. I promise you it's going to be a fun show because we're going to mix things up a little bit. So, first half of the show, what I'm going to do is I'm going to provide a bit of a recap and a summary of all the crazy things that have happened with Silicon Valley Bank, all these other regional banks, the price of Bitcoin. I'm going to give you a nice little recap of what happened over the last 9 days. It feels like a century. And then I'm going to give you a little bit of my own opinion, but then we're going to have some mystery guests come up. So I have DM'd some people who are pretty close friends of mine. And I know it's Sunday, so people are enjoying time away from the screen, but whoever was available is going to come up and share some thoughts on where they think all this is headed. And yeah, we're going to live up to the name of the show, which is Financhill. Although today, I'm going to introduce a new segment called Julian's Spicy Takes, where I take a little sip of the hot sauce and then give you my opinion on all this freaking nonsense going on after I deliver the facts. So without further ado, let's jump into it. Really quick, though, before we jump into it, I did want to say thank you to everyone who has watched the Guatemala video that I put out the other day. If you haven't seen it, go check it out. It was a blast. Beautiful country, beautiful people. That has performed so much better than I expected. And, I've been getting, Bitcoin donations to cover the expense of the trip from everyone all over the world, from like, 2 cents to like $100. It's been amazing. Like, you guys, I don't even know what to say. It's just so humbling that you guys appreciate that stuff, and it makes me so excited and inspired to make more videos like that. So thanks so much. You guys are the best. I don't know. I could not ask for more. So yeah. So let me pay it back to you by giving you a breakdown of the news. And this is a bit of a different streaming software than what I'm used to. The quality might be a little low. Please feel free to give me feedback if things don't look right on it, but I'll audibly be giving you everything you need to know, so you don't need to see the video necessarily. All right. So first things first, Friday, where did we end up last Friday? Friday before this Friday. Basically, SVB shut down. Everyone was in panic, right? Bank deposits, uninsured ones. We didn't know what was going to happen to them. All this money from Silicon Valley VCs and companies locked up. People didn't know if they're going to make payroll. But we had this inkling of a feeling that for sure something is going to happen over the weekend to make sure these creditors are made whole, or these depositors are made whole. Because if that didn't occur, there would be an entire like large scale bank run basically everywhere. If there was no assurance from the government that that money would be backed up by anything, calamity would have ensued last week. And calamity didn't ensue last week, but lots of stuff happened. And of course, the government did step in and provide. They don't like to call it a bailout, but technically they saved this company and they saved all the depositors at the bank from a really awful outcome. And what comes next is going to be the thing that I kind of postulate on and try and figure out. So, kind of going through the chronology of things, the first thing that sort of happened right after the bank run last week is that people found out shortly after that Circle, which is the company that issues the USDC stablecoin, also had a lot of reserves. In fact, was probably one of the biggest depositors in the Silicon Valley Bank. And so USDC is made up of $40 billion worth of US treasuries and US dollar cash reserves. And they apparently had about $3.3 billion of those cash reserves in Silicon Valley Bank. So while there was still all this uncertainty as to whether or not the government was going to bail out SVB, people thought, oh crap, that means that the USDC stablecoin might not be backed up. Thankfully, a day later, they came to the rescue. But if you were one of the lucky few who I don't know, watched the last show or just kind of knows how things work, you had that expectation of the bailout coming. So you were able to scoop up some USDC that was trading at, 80 to 85 cents and then sell it a day later back at $1. So still risky, but I know some people took that trade. I unfortunately couldn't. So that was the next little fallout thing. So by Sunday, March 12th, I believe it was, March 12th, the government comes out with two things. Number one, the FDIC says, we are going to use the Federal Deposit Insurance Fund to cover the uninsured depositors. Now, that is kind of unusual. Hasn't really happened before. Essentially, when you go and you open up a bank account, you have $250,000 of insurance from the FDIC. But this money isn't unlimited. They have a certain fund. The way that they raise this money is they charge banks fees essentially, and the banks pay into this big insurance fund. And in the rare event of something happening, the FDIC has a couple $100 billion to cover, a big event like this. But obviously, in this situation, they made an exception because I think they believe that if they didn't cover the uninsured depositors, you would start having bank runs everywhere, and that would probably cause more losses than the FDIC fund could have had. So they came out number one, with collaboration with the government and said, we're going to cover the uninsured depositors at Silicon Valley Bank, as well as the people who are under that 250K limit. So that's number one. The second thing that happened is that they seized Silicon Valley Bank. So they essentially took into receivership and said, like, this is no longer a public company. You can forget, all the management and all this stuff. We're going to try and keep it open, and the branches are still open, but we're going to basically run the show. The FDIC kind of stepped in there, took it over, right? So they're tapping into their fund of $100 billion. They're making all the depositors whole. Remember that although this bank went belly up, it's not like they have a massive balance sheet gap. It's not like they were missing hundreds of billions of dollars. Those dollars were just tied up in U.S. Treasury funds that right now, if they were forced to sell them, would accumulate a massive loss and create a negative hole in the balance sheet. So essentially, the bank is about 98% solvent, with the asterisk that we will be 98% solvent by the time 2026 or 2029 rolls around, right? Because we have these long dated bonds and we have this duration risk attached to them. So FDIC takes that over. And so SVB, everyone's made whole. You can go to SVB, take out your money if you want. So that's all good. The second thing that happened is Signature Bank was seized. Now, I don't know if I touched upon this in the last show, but Signature Bank is another bank that had a bit of concern around it because they were involved with crypto. And we talked a little while ago, and you might be familiar with another bank, and they all start with SI for some reason: Silicon Valley, Signature, Silvergate. But there was another crypto-related bank called Silvergate Bank, and that one is definitely in a solvency crisis of its own making, just because of all the fallout of the crypto space. But Signature Bank was one of the few other big banks that had quite a few different crypto customers. And so what happened is, stealthily, alongside the announcement that the FDIC was going to take over Silicon Valley Bank, they announced that we're also going to take, receivership of this Signature Bank as well. Kind of just stealthily snuck in there. And so this kind of adds on to the last few weeks and months of the US government really, really cracking down on cryptocurrencies and everything in that space. So, a couple weeks ago, it was the SEC said no more hosted staking. We're going to fine Kraken $30 million. They're in this ongoing litigation with Grayscale because they denied Grayscale an application to turn their GBTC fund into an ETF. So there's this big litigation suit there. And then obviously Silvergate has collapsed. The Department of Justice is investigating that. All this stuff. The US government is clamping down hard on crypto, and the Biden administration is looking to put a excise tax on crypto mining in the US as well. So just an all-out assault on the crypto industry. And basically, I would say this kind of sneaky taking of receivership of Signature Bank is probably the biggest headline of them all. And the reason behind this is that Signature Bank, while they did have crypto customers, it only made about 20% of their deposit base. And they were not considered risky customers because they weren't really making loans for these crypto customers. They were just holding onto their funds. I believe Coinbase was a big customer of theirs at one point, Circle. So crypto companies weren't using this bank to take out risky loans. There was no risk, with that. But the way that this story is being framed by, officials is that we took Signature Bank in receivership because of risks involving cryptocurrency. In reality, crypto is only about 20% of Signature's deposits. 50 to 70% of Signature's balance sheet and the way that they process loans is through New York real estate. So that's really, the bigger risk here, not cryptocurrency for them. And the craziest thing about all this that I learned is that Barney Frank, who you might know as the co-author of the Dodd-Frank reforms after the 2008 banking crisis, the set of reforms that kind of changed the way that banks had to report things and how they were managed and all these different things to avoid another 2008 style collapse. The co-author of those reforms was a board member at Signature Bank. And he was totally caught off guard by this. And he said that essentially he believes that it was a message sent to the crypto people to basically get out of the country and stay away from banking. And he claims that essentially if the market had reopened on Monday, that even with the expectation of the bank runs that would have come to their bank, they were fully liquid enough to cover any sort of withdrawals that would have occurred. And you can believe that or not, but I think the point is pretty clear that there was a very politically motivated attack to go after this signature bank as well. So we've covered SVB, we've covered Signature Bank, and now we're going to cover the new thing that I think is the biggest story of them all. The thing that I think is the reason behind Bitcoin rallying and some of these risk assets rallying and the big drop in bond yields. And that is that the Fed has stepped in with their own measures to kind of prevent this banking crisis, bank run contagion from spreading. And that is that they've essentially created their own emergency lending program called the BTFP, the Bank Term Funding Program. And so this is how it works. Essentially, if you followed the SVB story, you know that the problems that were caused was because there's a bunch of short-term deposits at a bank. The banks take these deposits and they invest them in long-dated assets like U.S. Treasuries, which means that they're really safe assets historically. You get a small coupon or interest, but if you sell them before the end of a certain term, you risk losing money, especially if rates have gone up. So they had a solvency issue because the bank essentially took people's short-term deposits and invested it in long-term things. And as everyone tried to pull those short-term deposits out, they got stuck holding the bag and couldn't sell these long-term treasuries without losing a substantial portion of money. So what the Fed announced in seeing that basically they're not the only bank, SVB was not the only bank who did this type of tactic. The Fed announced essentially that they were creating this $25 billion program that would allow banks to borrow from them and use those bonds at the mark-to-market, at the par value, not the mark-to-market value. So again, to try and clarify this for people who aren't into the whole bond situation and how those work, when I go to the US government and I buy a bond, right, and I bought it in like 2020 or 2021, maybe it was for 5 years, I would lend them $1 and they would give me this coupon that pays me 1.5% every few years. And this coupon has its own value too that kind of fluctuates with the market, right? But the promise is essentially at the end of the 5 years, I get my $1 back, I give them the coupon back, and I get the interest that accrues in the meantime. What happens is if interest rates go up and you're holding these coupons that only pay 1.7%, and now everyone can get coupons that pay 3 or 4 or 5%, then the old coupons aren't worth that much, right? They're not worth that much because essentially I could buy a new coupon that pays 4 or 5%. And if that's the going rate, then the old coupons should really only be selling for 95 cents on the dollar, 96 cents on the dollar, because they're only paying 1.7%. And so this isn't a big deal for a bank if you don't need that money right away, right? You're holding these things that in the short term, yes, are down big, but in the long term, you still get your $1 back from the US government plus the interest. Problem is bank run, what do you do? And so what the Fed has come out with is this term program called the BTFP, which allows banks to use these bonds that have decreased in value and borrow against them like collateral, like borrowing against your home equity at par value. So they can borrow against the coupons as if they were worth $1, even though the market would only want them for 96 cents. So if that's confusing, the metaphor and the kind of explanation that I like to use is just imagine that the bank, your house is on fire right now and it's slowly burning down and you're like, shit, I need a loan. And the bank says, yeah, we'll give you a loan, but we'll base it off of your 2021 assessment. We won't base it off of the current cost of the house because we know it's burning down. And so that's what the Fed is doing and allowing these banks to do. They're allowing the banks to borrow against their burning houses at their prior pristine assessment value. And in some terms, people are calling this the real bailout, right? They're saying, okay, this program that they're allowing, these banks to borrow against these, terrible assets, that are trading at what they are right now, it's essentially bailing them out with money that doesn't really exist. And so when the Fed does these loans, another thing that it's allowing is if you take up the Fed on one of these things and you can borrow against your pristine collateral, right? Your formerly pristine collateral that isn't pristine anymore. If you can do that, they also will charge you a rate on that loan. They're not just giving you an interest-free loan. They're charging you the prevailing rates of like 3 or 4%. So you can use this facility from the Fed if you need to. You need to shore up some extra cash. Sure, they'll hold on to your shitty bonds for you, but now you're going to pay them the 3 or 4% that the current rate is as well. So this program is nice. It gives some extra liquidity to these banks that need it, but it essentially doesn't really solve the problem because you're just creating a new way of banks borrowing money, and they're going to borrow at whatever prevailing rates. Now, there's a lot of conversation that this is kind of akin to yield curve control, and I won't get into that because that's a whole other complicated topic. But to me, it's essentially a bailout because it's essentially letting banks borrow against the Fed's balance sheet. And I don't have the chart up, but essentially, we know that the Federal Reserve has been raising interest rates and trying to sell some of their bonds back to the banks and take up some of that cash to lower their balance sheet. But what happened is in the last like 3 days, basically, the Fed's balance sheet has spiked and erased 6 months of quantitative tightening. So the basic analog here is that most people look at this like another form of money printing. This program can be kind of infinitely expanded, and the other programs could potentially be infinitely expanded as well. And we're going to dive into the moral hazard that's around that. So try and wrap this up real quick. We got 15 minutes till my guests roll in or not. We'll see who shows up. So you have these 3 things: SVB bailed out, signature seized, Federal Reserve comes out with their mini bailout plan, and the FDIC and some officials say that, we're going to backstop the banks. Don't worry, everything's going to be taken care of, right? They're putting this blank check out there essentially that if this spreads, the government will be there to backstop it. And they kind of have to say that because if they don't do anything, then the bank runs will continue, right? It's all just a big confidence game at the end of it. So give me a second here. What is going to happen this week? Because there's some other stuff that happened outside the U.S. to also cover. Number one, going back to the U.S., in reaction to SVB, Signature, all these things, a lot of regional banks, these are small banks, are undergoing the same problem because essentially what happened is that when the government came out and they said, the FDIC is going to cover everyone, they said, asterisks will cover everyone as long as we recognize that by not doing anything, there will be systematic risk. So essentially what happened is the government has created now a 2-tiered system where if they think that your bank that's going through a bank run is systematically important, don't worry, you will be backstopped. Either the government will pay it out with taxpayer money or not taxpayer money, or the Fed will loan you money. Don't worry about it. Like if you're important and if you going down will pose a greater risk to the economy, you'll be bailed out. And that essentially left people with the impression of like, well, what if, I'm a small bank? Like, what if I'm a really small bank and I'm not considered that important? Like, what if I, operate in one state or just one city, or, I have like 10 branches? Am I not important enough to get this bailout if I undergo the same problem? And, no word on that essentially, but it's been very mixed messages between, Janet Yellen and the White House and the Fed as to who gets these bailouts and who doesn't. But the overwhelming consensus is that it seems that your money will be protected at all costs if it isn't JP Morgan Chase or Bank of America or any of these like big name banks. But if you're in one of these smaller banks, it's kind of questionable. And so you have to kind of imagine what that causes to the psychology of the market, the psychology of anyone holding money in these small banks. Like, why would I ever do this? We're in this situation where all these banks failed in the last week, and there is no certainty whether or not, my little homegrown California or Montana bank is going to get bailed out if something happens to it. And a lot of these aren't even public companies. Some of them are, some of them aren't. We don't know what they're holding. We don't know the contagion risk. And, we don't know how many people have to start pulling out in order for there to be a proper bank run. So what is the point of holding money in small banks? And the other aspect of this too is that, well, hold on a second. There's something that hasn't caught up here with all the rates rising. And that is that despite interest rates going up from about 0% to 4%, I'll enlarge this, deposit rates haven't. So again, like if you go to a bank today and you want to open up a savings account and you're like, why is it still paying out like the shitty rate that I was getting in like 2020? It's because the banks need to make up this margin for all their losses. So they're not increasing their savings deposits rates. If you're going to a bank and you're expecting to get something close to the Fed funds rate or what you get on US Treasury, forget it, right? So the mutual fund rates go up because they hold these treasuries, right? And you can just buy treasuries themselves and get that 4%. But if you just want to stick your money in a savings account, forget it, right? And so what happens is that there's this big disparity and kind of realization from people that, like, why would I ever hold my money in a small bank? There's just no upside, especially in this situation. So you're getting all these regional bank stocks plunging. The confidence in these small banks is just plummeting. You got First Republic Bank dropped another 60%, even after all these, quasi bailout measures. Eventually, JP Morgan Chase and some of these big banks came out, I think on Thursday or Friday, and said, we're going to put some of our deposits in this small bank just to make sure it doesn't go under, right? The private sector is now stepping up to the plate. And then when we start to go internationally, you got a whole other suite of problems, right? Because if the Fed is, and the Fed and the government are saying, we're going to backstop, we're going to make sure all money is safe. And this was another realization with the whole Silvergate thing, is that, look, there are depositors in that bank that are from other countries, and they're technically getting saved by the action within the country as well. So, whether I was an American startup that had money in Silicon Valley Bank, or I was a Chinese company or a European company, I'm part of the whole bailout measure, and I'm part of being made whole like everyone else. That's super attractive if I'm a company that works overseas and I know this about the US banking system. And let's just say I have some US dollars in a US bank. Like, now I know that that country is going to bail out and save depositors no matter what, from any creed, from any walk of life, as long as they're in an American bank. So why would I keep my money in a country that could potentially experience the same thing when I can just move it into the US, and then I get my FDIC guarantee and I get my Fed BTFP, or whatever you want to call it, backstop? There's so much risk in this. And so one of the things I'm looking for in the next week is more of these international banks and international companies realizing the safety of their deposits in the event of these bank runs. Because I think essentially, we've had other bank runs throughout history, but we have not had many bank runs in the US. The last ones were 2008 in the great financial crisis. That turned into a big global event. And then, going back from there, the Great Depression. This is a new thing that has entered, new generations of entrepreneurs' minds. There's tons of entrepreneurs these days that were in high school back in 2008, and they're experiencing their first bank run. And they're from America, they're from Canada, they're from all over the place. And so, of course, this is going to drive a whole bunch of capital into US dollars and therefore US banks, and it's going to drive it into the big banks as well. And so, again, what I'm looking out for next week is how much does this spread? How much is this going to impact other, other regional banks? But they're going to lose their deposit base for sure if there's this guarantee. And also, they're going to lose their deposit base if they're still paying out, 0.5% for a savings account when I can just buy a US Treasury. This is something that nobody has talked about. But look at Google Trends for how to buy Treasury bonds. These are at the highest levels in like a dozen plus years, almost 20 years. People are looking, how do I buy a US Treasury bond, right? Once you understand it, that like the US government doesn't really default on those bonds, and I can get 4% for just locking up my money for 1 year. And who am I lending it to? The American government, right? So why on earth would I keep cash in a small little dinky bank that's paying 1 or 2%, or usually much less, when I can get it, lend it out to the American government and get 4%? And that's amazing. Like, think about that. If I'm one of these, FIRE people, retire early people, I have $1 million of cash right now, I can go and I can get a US Treasury, I think, for about 4%. I can get $40,000 a year, pretty much risk-free. I mean, that's like, why would I ever keep that money in a bank? It's a no-brainer. So you're going to see a lot of people pull the money out of banks, put it into US Treasuries. That will create its own effect. I think that will drive the yields down because more people will be buying bonds, seeing this kind of loophole. But it's going to have a big effect on things, and I'm excited to see what happens this week. All right, I don't want to go on too long. We've got some of our first guests trailing in here. But really quick, the other thing to kind of watch out for this week is Credit Suisse. Credit Suisse is a gigantic, systematically important bank based out of Switzerland. But they've had just a litany of problems in the last few years. They are, not in good shape because they've had these controversies. They were involved in this big trading scandal with a hedge fund called Archegos. They've been caught spying on former employees. They had to pay a bunch of fines for dealing with money laundering, huge layoffs, etc. You don't want to look at the CS stock price because it's probably like the worst bank you could ever invest in. But this week, amidst all this drama, one of the biggest investors in Credit Suisse, the Saudi National Bank, said, we're not going to be giving out any more money to Credit Suisse if anything happens. Now that was misinterpreted, I think, a little bit as like, oh my God, one of the biggest partners is pulling out. But it was more a response of, we're not going to put any more money into Credit Suisse because we are a 9.98% shareholder. And if we put in any more money into Credit Suisse equity or loans or whatever, it's a conflict of regulation interest or whatever. What that has caused is some problems with Credit Suisse. They now have had to go and essentially go to the Swiss National Bank to borrow another $54 billion. And I'm trying to keep up with what's going on, but apparently UBS or another finance company is trying to buy Credit Suisse at about a 90% discount from the current stock price and kind of just, become the parent company somehow. I don't know what's going on, but this is a bank that has $500+ billion of assets and is very systematically important. So yeah, I probably missed some stuff in there, but that is sort of the catch up on everything. And so it's 1:56 right now, my time. I'm going to give you my rant, my thoughts on the whole thing, and then we're going to bring up our guests here, and they can chime in with anything I missed or their thoughts on this. So, all right, we're going to call this Julian's spicy take. This is some Los Calientes hot sauce from Hot Ones. Oh, it's actually really tasty, but excuse me if I hiccup. I get this weird thing where I hiccup when I have hot sauce, but it's getting me revved up. Okay, here's my rant. This is all, oh my God, I had way too much of that. Fuck. Here's my rant. To me, this is all about sowing the seeds of a CBDC in the US, a central bank digital currency. And it is happening at light speed. You have one prong of all of the sowing the seeds of doubt in crypto spilling over from last year. You had FTX coming down, all the investigations around that. You have this Operation Choke Point, debanking all these crypto companies in the US, putting taxes on miners, right? One of the foes to a central bank digital currency is going to be a decentralized monetary standard. So US on one angle, trying to nip that stuff in the bud. Now, I'm not saying that they intentionally wanted the other side of this equation, this small banking crisis to happen, but it definitely doesn't hurt if they want to get people to accept a central bank digital currency. You got to think about it, right? The IRS, the government, they know the balance sheets of these banks. You're allowed to track who owns what treasury and their duration risks, and all these things are very transparent. And, to me, it'd be crazy if there isn't anyone in the government actively monitoring this stuff and what's going on. So I think that someone probably knew in the government that this SVB thing had a super high risk of failing. And then it happens all of a sudden, right? And we're led to believe that it kind of just happened out of nowhere. Someone knew what was going on besides just the people internally at that company. We knew the people internally at that company knew what was going on. They sold, millions of dollars of shares 2 weeks before they had to collapse and, dilute their stock price in this whole drama, right? They knew what was going on. Someone else knew what was going on as well, especially in the higher part of the government, right? Government always reacts. They never stem things in the bud, with the exception of the signature case, which they nipped quickly before anything could have happened, right? So they're always reactionary, right? It's the third step of this, right? Second step, play ignorant, let some things play out, right? Third step is let people freak out about this a little bit, right? I don't know if it takes 48 hours to come up with a loan program or something, but there was a good 48 hours between Friday and Sunday of the government announcing this, that everyone was freaking out and calling for these bailouts, right? Let people ramp up a little bit. Let people start freaking out, Is the government going to step in? Like, what are we going to do, right? Let it step up just a little bit, just enough so that there isn't actually a bank run on Monday when the bank's open, right? Just make sure you got something for Sunday. Let people freak out a little bit, right? Uncertainty. come to the rescue with this, this little quasi bailout thing, right? Where you can loan them unlimited money, where the FDIC suddenly covers everyone's deposits, right? Even though they're not supposed to, and there's huge moral hazard in that, right? Set that up. Biden comes out and he's walking like a zombie. He's just barely squeaking by on the teleprompter, telling everyone like the system is okay and this is not a bailout. There will be no taxpayer money. It's like, yeah, cover all your bases there, right? Government comes to the rescue. Everyone loves a rescue story, right? Number 5, you set up this unlimited guarantee for depositors at US systematically important banks. That's going to help your dollar. That's going to help your US dollar. Like I said, everyone's seeing what's going on here. They're being wishy-washy about who's protected and who's not, but we know for sure Goldman Sachs and JP Morgan Chase. So those bank stocks got pummeled, but I can tell you they're getting tons of deposits. They're coming in all over the place, from the people who had money at these small banks, from people internationally. Money's just fucking flowing into the US system, right? So it's all good. It's all smooth sailing there, right? And that's great for the US dollar. Makes the US dollar a little bit stronger. The question is the strong US dollar always a good thing for the US? I don't really know. Not all the time, right? But in this small little like window of opportunity, it's a good sign. It's a good sign for them, right? More centralization of money within the US, more centralization of power. You get it, right? This is my big conspiracy theory, right? The next step, and they're going to do this, obviously, is that they're going to start interrogating all these bank CEOs. They've been going and doing these crypto conferences like, oh, is mining good for the environment? Blah, blah, blah. They're going to get, the Silicon Valley CEOs that did the insider selling 2 weeks before, the Signature Bank CEOs, all these people. They're going to use the, political hearings as this big, stunt performance piece. And I think the resolution, the kind of thing they're going to come to at the end of all this is that, maybe the US government should be a little bit more involved in the banking system. Maybe they should be overseeing these things a little bit better. Maybe we need more reforms. Let's bring back some of the things that were peeled away, more stress tests, looking at all these things, right? Let's have little government employees checking in on all these things more often, checking these balance sheets out, so we don't miss the next bank run, right? And then at the same time, roll out Fed products that help with banking, right? Next step, Fed Now. So Fed Now is this, remittance or way of sending payments that the Federal Reserve has been working on for 4 years. They're rolling this out in July. So businesses will be able to send payments and use a Federal Reserve wire system that does instant settlement 24/7. Oh my God, just like crypto. What an innovation, right? Who needs crypto now? Who needs, stable coins? The Fed now has their own system. And sure, it's going to be buggy, right? But this is what gets people a little bit more comfortable with the idea of, the central government starting to take over all these different depository institutions and, financial, wire lines, right? And then slowly but surely, the next step is move towards the nationalization of these systematically important banks, right? I mean, you can argue we're there already. For sure, it's like a lot more, I would say, nationalized in Canada. Like the big four are under complete surveillance by the government at all times. They listen to their beck and call. You could have seen that in the trucker protest. You can see it in how Interac e-transfer works. I mean, that's essentially Canada's version of Fed Now. They control all of that stuff, right? Interact's like its own company. It's like, no, it's not. It's like it's basically Canada's version of a wire service, right? Slowly but surely, you work your way into eventually, oh, well, either something catastrophic has to happen for us to, emergency usher in a CBDC, or eventually people will just accept it because the government's just doing such a good job at ensuring the safety of your money in whatever institution you're banking at, right? Just slowly wave it in, usher it in. And that's what all this stuff is leading to. That's where it goes. And every one of these things, you can look at them as, disastrous for the economy, but it's pushing someone's agenda in the financial system at the highest ranks to centralize control of money. We're going towards a system where if the federal government and people don't step up, regional banks are going to disappear in America. There will be no point. Depositors will pull. They will shrink. You can look at the regional bank ETF. This thing has lost 50% in the last week. You're crazy if you think that thing is going to bounce back to where it's supposed to be, because the government does not have it in their interest to have a thriving and decentralized banking infrastructure in America with all these different banks. They would rather it be centralized. It's easier for them to have it within their purview if it's centralized under a few entities, and it makes it much easier eventually to roll out the CBDCs, right? So that's where it all goes. And if you want to know why Bitcoin's running, I think it's that some people see the writing on the wall there, and they realize that as this system becomes more centralized, as assets collect under one roof and there's fewer banking options, that there is only one alternative, or there is no alternative, Tina, right? It's Bitcoin. That is the alternative to all this stuff. It's your way of opting out. It's your way of having a financial system without the US government, without banks, without any of this stuff. It's already working in places. And I don't want to say that, because of this, Bitcoin's going to go to 1 million like some crazy people on Twitter, but I think people are starting to see it a little bit. And I think people are starting to realize that it's probably dumber to own zero than to own just a little bit, right? And everyone's right now, like, I didn't bring this chart up, but where was it? So Credit Suisse, which is one of the banks I mentioned, they have default insurance, right? And you can pay $1,000 now, or €1,000 to protect against 10,000 euros of default. That's how much you have to pay if you want to protect 10,000 euro of Credit Suisse paper. This rate has exploded, right? And this is what the whole big short was about. Michael Burry just bought all this insurance on banks failing, and he got paid out big when they did, right? But people are seeing the writing on the wall. One of the biggest financial institutions now, the cost to insure your holdings at that bank have tripled in the last 2 days. A better way to insure your savings and your time across the entire banking system is just to own some Bitcoin. And I think people are realizing that. And I'm a skeptic. I don't think Bitcoin's going to like 69K this year or anything like that. But slowly, people start to realize what Bitcoin is about, what the use case is. It takes shocks to the system for some people to get it. Sometimes you can just casually, have a bull run and everyone just kind of like jumps in and Dogecoin and fun. But sometimes these exogenous shocks come to the system, these black swan events, and they make people realize that their money's not as safe as they think it is. And it naturally leads them to Bitcoin. And that's the type of adoption that is scary because it has implications for everyone. But it is, in my opinion, what is driving the Bitcoin price right now. And without further ado, my rant is over. Let's bring up Dave and Len here and see what you guys think of this whole thing. You guys have been thinking about this. You work in the industry. You talk about it. What's up, gang? How's it going?
Cheers.
Hello.
Yeah. Maybe a quick introduction for some of my followers who don't know who you are. Start with you, Len.
I'm Len. I'm from the Canadian Bitcoiners podcast, where we stream live every Monday night, 7 p.m. Eastern. And also we do a interview on Wednesday evenings around 7 p.m. Eastern as well. And we talk about what's going on in the world of Bitcoin, but also a lot of what's going on in financial clown world. And there's a lot of that going on right now. We can see it. It's around us.
Big
but time. You know what? I'll talk about it after Dave has done his intro. I don't think a lot of people are aware. So yeah, that's my 2 cents. And over to you, Dave.
Thank you. I'm Dave Bradley. I am widely known as the strongest and best looking Bitcoin entrepreneur in Canada, among many other things. You can find out more about that at my website, bitcoinbrains.com, as well as everything else I'm working on. I am drinking a mule here made with Woodford Reserve, which is a much better idea than hot sauce. I would like to be sponsored by Woodford Reserve, just in case anybody listening happens to be a liquor rep for Woodford Reserve. And I have lots to say about this.
All right.
Water.
Just fire off, guys. I want to hear it.
I'll go first, but I just want to say that what we're experiencing now, personally, it's very important to all three of us and everybody listening and watching in. But a lot of people are unaware. And the reason why I think they're unaware is I'll just go to Google Trends. And, we can't totally trust that, but we could take it with a grain of salt. And if you go look at the trending searches right now, it's incredible. You can go by country or even real-time searches. Arsenal versus Crystal Palace, Brandon Crooks, Wisconsin basketball. But there's sometimes you just gotta go on the list. You can't find this Credit Suisse stuff. And it's incredible to see what's going on. So a lot of people are being, their attention is diverted watching or listening to something else. And they are not aware of what is going on. Their money that they have parked in banks is at risk. They may not get access to this. And watching the people running the central banks and the people running the financial systems, the ones that they're gonna get paid themselves at the expense of us. And every time they do it, it's just added inflation, and we just get another kick to the ass. And it's unfortunate about this, but backing these deposits 100%, that is insane. That is essentially saying the banks could take unlimited risk and just run with it. And whatever they do, even if the shit hits the fan, sorry if I swear, but even if the crap hits the fan, they're okay because the money printer is there to back them up. And for us, every time we have added inflation added to our balance sheet, we have to tack on added risk for us just to keep our heads above water. And if things go wrong for us, too bad, so sad. We're the ones that are impacted, and nobody's going to bail us out. The system is
we're not systematically important, Len. That's the problem.
That is correct. We're at the very bottom of the food chain here, and unfortunately, that's the way it is all this time. But we have an option here where we could opt out and buy Bitcoin. And every time we do it, it's a voluntary purchase of opting out the existing system. And I will continue to do it. Watching the price of Bitcoin continually rip is an incredible thing because everything else is on fire, but Bitcoin, for whatever reason, is going up. I know what it is. You gentlemen know what it is. Dave, I want to hear your thoughts on this.
Yeah, thanks. I think an interesting thing to discuss in this whole thing is like something that Julian kind of alluded to is this move towards this central bank digital currency. And I hear a lot with all the changes in the world the last few years, you hear a lot of speculation that there is this global conspiracy in the WEF and all these, like bond villains out there trying to basically turn us into ants in a farm. And I think there's this interesting philosophical concept called Hanlon's razor, which is basically like never ascribe to malice that which is adequately described by stupidity. So I think the question that I'm trying to bring up here is like, is there a big global conspiracy moving us in this direction, or is it just the natural inclination of sort of the statists, the moochers and the leechers of the world to move towards more and more control, and the natural inclination of the state to try to control everything? And I think that's kind of the angle that I would take for the most part. And I kind of go back to this story called the Cobra effect, which once you have heard about this, you start to see it in basically like every single thing that every single government in the history of the world has done is some level of the Cobra effect almost. And the Cobra effect was, I think the 1700s, the British were ruling India, and there was this big problem where there were too many cobras in Delhi, and they took the seemingly rational stance of taking out a bounty on the cobras. And one little problem was that they didn't really know much about the local economy, and so they ended up pricing it wrong. And one cobra was like 3 months average wages. And so it immediately, this massive industry of cobra hunters sprung up who became suddenly pretty well off. And the problem was they were very good. They got rid of the cobras quite quickly, and then they had killed their cash source. And so the cobra hunters innovatively became cobra farmers. And they went for several years basically like running cobra farms and turning the cobras into the British bounty system. And then somebody at some point was like, like we never see any cobras, but like we're still paying a lot of cobra bounties. And they investigated and pretty quickly found this massive system of cobra farms, and they're outraged. So they canceled the cobra bounty, and then all the cobra farmers released their cobras. And now you had this situation where like a pretty straightforward decision taken with the best of intentions has had an outcome that is exactly the opposite of what was intended, because whoever made this decision, the genius bureaucrat who decided this, was not able to anticipate one fairly simple second order effect, and the whole thing fell apart. And that's exactly what we're seeing right now in this giant financial banking meltdown. Is just like a whole bunch of examples wherein the Fed and the banking system and all these people that thought that they were so smart they could manage a complex system like an economy with these two levers of basically like you can either pretend you're going to raise or lower interest rates, or you can actually do it. And they think that they can somehow manage the entirety of the economy with those two forces. And they're just now starting to realize that like maybe they're not as smart as they thought they were. In that moment where Senator Lankford from Oklahoma is grilling Yellen And
Oh,
he
man.
mentioned this exactly the same thing. Like, it's a second order effect of like, you just created an incentive for everyone to take their money out of the banks in Oklahoma. And Yellen's just like, oh shit, there's fucking cobras everywhere. Like, they're only starting to realize that they don't know what they're doing. And they're now in this spot. Like, we've got a rate decision coming next week, and they're fucked in either direction. And they're trying to basically make both decisions at once. That's basically what this back system is, right? Where it's like, they're basically saying, the unlimited free money is still there for some, but only for the ones that we choose as systemically important, right? And at the same time, like, we're almost certainly going to see a rate increase this week, even though we're in a position where an unprecedented amount of tightening has pretty much caused all of these sort of unforeseen liquidity shortages. And the question is, like, did nobody see that coming? Like, SVB somewhat rationally paused their lending portfolio some time ago because they recognized that their clients in Silicon Valley were feeling a lot of cash flow pressure because of sitting on all this debt with rising rates. And the rates for venture debt have never been good in the first place. And so they're starting to see, hey, the risk of our lending platform is getting worse because rates are going up. We should pause lending. But then the next step, which is like, what do we do with this money we were going to lend out? They're like, yeah, let's put it in hold to maturity mortgage-backed securities and long-term bonds. Like, that's exactly the opposite move that you should have rationally taken if you thought rates were going to keep going up. So, like, are we explaining all of this with malice or incompetence?
I think for sure I side with you more on the side of incompetence, but I think there is a desire for a centralization of the banking system. They don't really have a clear route there, and some of these things are just falling into their lap. That's kind of where I stand on that.
Yeah, I think there's going to be an eventual move for the Federal Reserve and other central banks to start holding equities directly on their balance sheets. And that move will probably come fairly soon and fairly suddenly. I know the news came out like an hour ago or whatever that like UBS is buying Credit Suisse. So they got their like private sector bailout done essentially. They're buying them at 76 cents, which is like triple what the offer was yesterday.
Yeah.
So
you see Justin Sun put in a bid?
He's trolling everybody for sure.
So
there's no way that there's a real bid.
Yeah, and it's actually like there was $3 billion. So it's not like the equity portion of this whole thing is not even that much in the scope of the numbers that we're talking about. They've got $500 billion under management. They were after a massive collapse, trading at like $7 billion yesterday or on Friday, and now they're being sold for like $3 billion. So, I mean, they've probably taken some steps in that deal. Like, I don't know how they got from 25 cents to 76 cents in 24 hours.
It was Justin Sun. He had a good bid.
Yeah, the only way that could have rationally happened is there's probably a bunch of government guarantees in this deal. And I would bet, without having read anything about this, I would bet that some of those guarantees involve the possibility of nationalization of the bank if those the guarantees are not met, essentially. And I think like we're going to see bank nationalization at a significant scale like this year in the Western world.
Oh, Dave, I think there's a name for something when the government starts owning all the banks and corporations. Could you remind me of that?
Yeah, I mean, it's communism. And
it's inevitable that it's going to go down this path because they've painted themselves into a corner. And if they let this thing collapse, so many people are going to feel the pain, and they're going to think the best way to get out of this is just do bailout, nationalize it, put it on their balance sheet, and see if they can run with it. There's one thing that though people aren't really talking about is pensions, because pensions also follow the same path that these banks that have capitulated up until now, where they had bonds on their balance sheet. I think they were mandated to buy bonds too. So now with the rapid rise of rates in a short period of time, they're also going to feel the pain moving forward, and something's going to have to happen to make them whole, because they can't continually keep paying out.
That's a really
Watching
good
them, the
point.
stock markets, the stock markets are not doing that well, so they lost money on their equity portion. So eventually something's going to come that they're not going to have enough money to meet their obligations. That's going to be one massive domino to fall, and this is going to impact people that have absolutely no way to rectify the losses. When you're an older, I'm calling them older, more experienced individual, your purchasing power, your ability to make money is less than somebody in the 20s, 30s, and 40s, and so forth. So if they get wrecked, they have nothing that back them up. They're absolutely screwed. So pensions, this is one that I'm looking at as, well, this is a canary in a coal mine for me.
Well, yeah, like most pensions, to me, I understand, like they have to basically match inflation on their performance record. If they can't, and that was pretty easy when the market was doing, 8%, S&P 500, and then, CPI was 2%. But yeah, like last year was a doozy, right? Like 8% inflation, markets were down, what, 19% or 18%? So they have a huge catch-up game. And then also, like, there's the rebalancing equation, right? Like, luckily, maybe not luckily, but it seems like bonds, like the bond portfolio and the stock portfolio, fell about the same. So the rebalancing is not that big of an issue. But yeah, huge implications for pensions.
Well, and that inflation number that you're listing there, like maybe they have a mandate to match that, but in reality, the whole purpose of the pension is to be able to provide living expenses for people that should, in theory, match actual inflation.
Yeah.
Like,
they think CPI is actual inflation, right?
Yeah, but it's not.
No,
it's not even close. Like, I think educated guess we're in the like 20 to 30% range, and for like real spending and like real things that are impacting people's lives, and that would be it's probably worse where you guys are. Like, I'm in Calgary, and the housing prices are not nearly as insane as Vancouver, Toronto, and I think people are feeling it everywhere. Like, people are feeling the fact that a steak costs triple what it did 18 months ago, and that's not something that happens when inflation is at 8%. And I think they're juking the way they measure inflation to try to get those numbers there. But in reality, what's going to be ending up happening is that those pensions are going to be just like drastically under-resourced. Well,
that's like Greg Foss's. Greg Foss says that, like, basically by 2040, like, there is not enough money for the entitlements. Like, if the deficit keeps going, like, the pensions will not be able to be paid out by 2040, no matter how much you raise the debt ceiling, right?
I think it's going to be a lot more than that, because a lot of the big pension plans, and the ones that are more relevant to us, the Canadian pension
CPP?
plans, Canada Pension Plan, obviously the Ontario Teachers Pension, they've done really well in terms of yields in the last like 10 years. And a lot of that has been gambling, and like,
they bought Celsius, right?
And things like buying a big chunk of Alibaba before it was a big deal, and all this stuff like that has on the books yielded really terrific results. And all that really is an indication of is that those large institutional investors like that have been able to tap into like the faucet of free money. And now that the faucet of free money is contracting, and inevitably somewhat has to, they're not going to be able to make yields like anything like that. And I think that because they've been used to that kind of risky behavior, they're actually probably going to incur pretty serious losses in the next, this year, several years. It's hard to predict where the world will be at all several years from now. I've been telling people before this Credit Suisse news came out today, I was like, yeah, I'm going on this podcast. What are we talking about? Oh, the end of the world. And then like, when is the podcast scheduled for? Well, the podcast is on Sunday, and the end of the world is scheduled for Monday. So,
so someone brought up a good point, and I always like to think about this. Like, the system is falling apart, but we always find a way. Like, Argentina has been dealing with like 100% inflation for a while, and on a lot of metrics, like, things are getting worse there, but it hasn't evolved into complete anarchy there, despite them having inflation for as long as they have. And a big part of that is just because they've been able to perpetually borrow from the IMF. I mean, when that faucet stops, then maybe the anarchy starts. But
another facet there, and this has happened pretty much everywhere in the world, is that when a currency starts to collapse like that, they pretty much inevitably start switching to something better, right?
Yeah.
And most of the time in the places that we've seen collapse, what they've switched to is some version of the US dollar. There was a really interesting period there in Venezuela where like iTunes gift cards were like a big part of the currency in Venezuela. And they're like US dollar denominated, but they're like an easy way or like a possible way for someone in Venezuela to access a digital version of the US dollar. And Bitcoin is kind of like the third currency that was popping up there. And so in most of the world, when the currency goes, they just jump to the US dollar. Mm-hmm. We're probably going to see around the world over the next few years, like different choices for where they jump to. And I would anticipate like 5 to 10 years from now, we're going to have like 5 or 6 currencies in the world because everyone has jumped to something else in a phase of hyperinflation like that. But it's not impossible either that the dollar-backed Western financial system will be one of the ones that just explodes. And if it happens, it's going to happen in like a day or two. Yeah. And people will jump to whatever they find to be the most reliable form of money. And it depends on how badly that goes. It might end up being like cans of beans, or it might end up being Bitcoin.
I would imagine still remittances are going to play a big factor in keeping a lot of people in these countries able to meet their daily obligations. And up until now, I mean, iTunes gift cards is one of them, but I think a lot of it was US dollars being sent by friends and family from abroad. So now with the US dollar, it has been slowly getting wrecked, and it's going to get wrecked even more so moving forward. The US is exporting their inflation to these countries, and these countries, they don't have the ability to absorb 5, 6, 7% official inflation, and unofficially, as we mentioned, it could be 20%. When you're earning pennies or even dollars per day, it's impossible to make ends meet when then you have to then tack on the added official inflation on top of that, and then the haircut that's Western Union takes on top of that when you're getting money from remittances from overseas. So the US, what they're doing here, it's not just impacting their own citizens, but it's impacting everybody abroad that has been using US dollars. And there's a number of countries that have been doing it: Venezuela, Zimbabwe, El Salvador. So there's a lot of countries that do not have.
So many countries have their own currencies, but they're just dollar pegged, like Guyana as well, and a lot of those countries.
Yeah. So and they're gonna feel this more than anybody, because we still have the ability over here. I would imagine that a fair number of people have assets. They could still draw upon homes, cars, or whatever, maybe even if they have equities that they purchase. But in those countries, you don't have that. You're living day to day from hand to mouth. And you tack on 20% inflation on top of that. Good luck.
Yeah. Well, this is one of the things when I went to Guatemala that I realized, and they far and away don't have a big inflation problem, but what people do when they don't have assets like stocks or gold or whatever to invest in is they just, especially in these economies where everyone kind of has their own business, is they just stock up on inventory. Like, we were going into stores there and we were just seeing crates of Gatorades, right? They never go bad, like soups, dry goods, they just load up, right? And it's just because like, well, I guess I could keep cash around, but if that's too much, then just like, inventory, right? And also like that in some sense, I don't know, in the macro sense, but like, I mean, that I got to imagine has some effect on inflation in some sense as well, right? When people start using everything as an asset. So
the barter system becomes king at that point. Yeah. And I always wonder too, I look at what happened in the past. I mean, I studied history in school, so that's generally the thing I do, but I want to like to see what's going to happen, at least in the next little while, because it's hard for me to predict what's going to happen 2 or 3 years in the future. But I'm looking at what's going on in the UK, and they're making it much more difficult for people over there to onboard onto Bitcoin. There are a lot of banks and credit cards that they've basically stopped or are stopping allowing to buy larger dollar or even any dollar purchases into Bitcoin. And as we get more problems over here, banking system continually falls apart, I think regulators may look at that and may seize the opportunity to say, you know what, we may want to stop or at least put some sort of restrictions on for people to onboard onto Bitcoin as a way to prevent money flowing out and people buying essentially the hardest asset out there.
I know that there's like a field of people in the US like Dennis Porter who are really trying hard to convince regulators to, be favorable to Bitcoin mining, because they look at this whole industry as like a way of just creating more jobs. But I think at the end it's almost a lost cause, because if people start seeing Bitcoin as an inflation hedge and governments start looking and seeing the flows from their, traditional assets into Bitcoin, they don't care about, the couple dozen jobs created by mining or Bitcoin entrepreneurs when it risks the entire stability of the financial system, right?
Yeah.
So
guys, I got to run because my drink is empty and I have people and places to see and do. And it's great
final
to talk
thoughts.
I have a whole rant about the UK and everything, but I got to run. I have to. The UK is an example of where regulation has gone too far, is the short answer. But I would love to come on either of your shows and talk about that at some point. But I have to shill two things before I go. One of them is the amazing art behind me, which is a full power Mate-X. I don't know if any of you have seen the large scale ones.
No.
So that's amazing. But we also have the Bitcoin Rodeo coming up July 4th and 5th. I hope to see both of you guys there. And it's going to be a Bitcoin conference that will be better than other Bitcoin conferences.
Awesome. I'm excited.
Throwing down the gauntlet. I love it.
Yeah. Yeah. Well, great to talk to you guys.
Sounds good, brother.
I got to run.
All right.
Take care.
Yeah. Yeah, Len, one of the things I was thinking about the other day is that I know it seems that every Bitcoin cycle people have like lower and lower expectations for how high it goes, because it does seem like every cycle it's just like less parabolic than the last. But this next one, I think has a big impact on network effects, because you have El Salvador and like a ton of these Bitcoin circular economies spreading around, and the word of mouth from all of these people who basically have never had a financial asset before in their life, now realizing, or unrealizing 100, 200, 300% gains by just holding Bitcoin, that is going to start spreading rapidly in places like Guatemala, through Latin America. And I think that happens fast. Like it's amazing the speed at which it's growing in these economies in Guatemala. And now I'm seeing in Honduras, and it starts there, it spreads out. But once Bitcoin starts breaking that previous all-time high, any person who's ever saved in it is up, some magnitude of percent. I mean, it becomes that medium of exchange that everyone's going to want some part of, I think. And that's going to be a big factor, I think, in that region for sure.
Yeah. And if you're able to hold on to Bitcoin, it can be a real game changer for those people. But it just seems to be like it's very difficult to do so when it's just basically it's hand to mouth every day, and saving anything is just not an option. And now with everything going up in price, supply chain issues, and the forced close down of the economy a few years ago, 3 years ago, it just all just piles in, and it makes it so much more difficult to make ends meet. And so these, when you're getting money.
Yeah, I think the COVID thing for sure like affected these businesses. Like they had to tap into reserves. But the thing is like a lot of these small vendors, like they're profitable, right? So they're just looking for any savings vehicle. Like even if there's an economic downturn, if they have to, they'll sell some Bitcoin. But I think a lot of them just look at it like, okay, I'll just do this instead of just buying more inventory, or I'll just do this instead of like, keep piling cash under the mattress. And I don't know. I think they have the long time preference to be able to hodl through a cycle, at least a few of them for sure.
Well, the one thing, if they're taking, I mean, these smaller vendors, if they're taking credit card, I'm not sure if they are. One way to easily create a lot more profit, or some profit, is transition to the Lightning Network, where fees are much, much less compared to what you're paying Visa and MasterCard for every time the card is swiped. So that's one way that they could really transition into it, but also at the same point is just make a little bit more money for every transaction. So that's something that it's very bullish for me on the long term. But definitely the short term over here, we're going to feel some pain in North America. There's no way we're going to get away from this without feeling lots of pain. And so many other people are going to be in the same position. And I think now the faith in the banking system, I would say, at least in my lifetime, and I can't speak about other people that are older than me, but it's at an all-time low. I can't think of a time in my lifetime that the faith in the banking system is this low. In the past couple of years, we've seen people shut out from their banks. Now, this past couple of weeks, we've seen people shut out from getting access to their funds, and banks toppling over and then being purchased for pennies on a dollar by others. This is scary stuff.
And I think for sure the worst since the great the financial collapse in the US for sure.
Well, this is we're scratching the surface.
Yeah.
If you're going to compare what happened last year when we had Luna collapse and Voyager, 3 Arrows Capital, Celsius, BlockFi, Genesis, and probably a whole other bunch that I forget. We just now have Silvergate, Credit Suisse, sorry.
Yeah, all in 3 days. And they're so much bigger than all of those too. That's a really good point.
And there's so many more. And nothing
collapse.
Credit Suisse is a very, very large bank, but with all due respect to SVB, it is a large bank, 16th, I guess, in the number I was hearing in the States. There are much bigger ones out there that, man, if something were to happen, it would be catastrophic. I can't see that happening so soon. Eventually it's going to happen, but oh man, this is not looking good. And
well, the big ones are safeguarded by the money printer, right? I think the panic really happens with the regional banks. And I think if, man, people are all shutting down their credit unions and stuff, first of all, that's going to impact the economy. That's very deflationary, because if these regional banks collapse, I mean, they employ thousands of people across the country. It's a huge sector, right? So that's going to start spooking some people there. But yeah,
those regional banks now, because they're going to be losing customers, and it's understandably so why they would be, in order to entice customers to stay on or sign on new customers, they're going to have to take on excessive risk in an environment you shouldn't be able to do it. That's the only way that they're going to be able to make ends meet. And then that's going to accelerate the process.
It's a death spiral for them, because the only way they can compete, you're right now, is by offering, either they take excessive risks or they have to have huge margin cuts. And that's just like a death spiral when they're kind of fading away anyways, right? Like they had this massive influx during COVID because they offered competitive rates back then. But now you don't have to be competitive, right? It's just like 4%. The government gives you 4%, right? And if you can't make a margin off that, then you're done. And seemingly they can't. So
yeah, and just like in the Bitcoin mining sector, where we had some capitulation and consolidation over there when times were tough, the same is going to happen here with the banking sector. You're going to have the smaller guys just either be gobbled up or fall, and then the assets bought up on pennies on the dollar, and then you just have consolidation. This is just the reality of the situation. The ones that are standing at the end, they're going to be holding on a lot more risk, because they may be bigger, but they're now holding on everybody else's risk that they bought up. And once this thing topples, there's no stopping it. There's no money printer out there that could backstop everything and ensure that everybody's whole and the currency itself that they're printing still has value. There's no way to do it, and we're screwed.
Tight corner. All right, what's the positive angle? Let's wrap up on that. And I know it's just like, oh, just buy Bitcoin, but like, what's something we can look forward to?
Well, I think it's now turning over a new leaf. They've had so much, and when I say I'm looking at the people at the levers of the financial and monetary policy. They've had so much power for the past 50 years or even longer than that. And I think that power needs to be taken away, and more checks and balances need to be installed. And I'm not sure exactly how they're going to be able to move forward and ensure that people are going to be, I don't know how to word this, but people are confident with the system that they're going to be setting up. But there's got to be some sort of back system where it's going to be Bitcoin backed, or I can't see it being gold backed. But even if it is Bitcoin backed, I've been studying the gold backed currencies in the past. Eventually they fail because it's a reserve. Like, it's not reserve, it's a fractionally backed, and then they just continually change the reserve rate.
More kicking the can, right?
And that's unfortunately what's going to happen. It's just human intuition to do that, because they think that they're able to solve the problems with tomorrow's money today, and they don't give a crap what's going on. And I don't know. I mean, it's hard for me to look at the silver lining at all this and say we're going to be in good shape in the end, because no matter what, it's just going to be a cyclical thing, and we're just going to be back to square one, in my honest opinion.
I think my silver lining is, I think for once, maybe in our society, for at least since I've been around, I think people's pursuance of knowledge and understanding and financial literacy is finally going to tick upwards. And, whether they find Bitcoin or they just find someone who explains this as honest for what it is, I think that stuff's going to do well, and it's going to spring. And I don't know. I mean, you have all the metrics too on the Canadian Bitcoiners. You guys have done, like, you continue to grow that through the bear market. But, we all know that when the assets run high, then you get a whole bunch of tourists. But I'm hoping that, some of these exogenous events start getting people to seriously invest the time into knowledge rather than just try and find the next, asset that's going to pump and protect them. because that's kind of what I felt happened in 2021 is, you know, people are like, I need to find what coins to pump. Like the biggest YouTubers are all, you know, financial, like real estate gurus, or they're all like bit boys, right? They have a million, like there's no Bitcoin podcast with a million subs, not even close, maybe what Bitcoin did. But I think that page is going to turn, and, you know, eventually people won't just be looking for the next asset to pump, but actually the long-term investment into understanding how the system works and, you know, principles for protecting yourself.
There's so much garbage out there that we're going to have to liquidate and
Yeah.
bring it down to zero. There's still a lot of work for us Bitcoiners to do.
How's that Bitcoin dominance chart, man? That's been nice to see. I
haven't
care
been
about that way
following
more than
that.
the price. I just want to see that go back up to like 60, 70.
Is it trending in the proper direction?
Oh, dude, it's skyrocketing. I'll try and pull it up here real quick.
Okay.
I mean, this whole move in the last week, like, it's the highest Bitcoin dominance in almost a year. I was surprised that it took this long to go up because, you know, shitcoins have been falling so much harder against Bitcoin, but I guess, you know, Bitcoin's drops in pretty bad here.
Well, ETH had a decent run, I guess, sometime last year, and
this week, Bitcoin has gained 8.5% market share against every other crypto in the last week. I think that's the biggest jump since the Luna collapse, basically.
Well, people are starting to realize that it's an asset. You know, it's 21 million. That's the hard number. Can't confiscate it. If you hold on to it, you're okay. So there's a lot of people that do understand the fundamentals behind it. They just needed something in order to push them in the right direction to buy more. I guess people have already bought some, just buy more. And how many businesses out there that are sitting on cash, looking at companies like Apple and whatever, they're going to have to do something moving forward. They're not going to continually buy bonds and do that
Cook knows about it. He just hasn't bought any, but yeah, I mean, it's a big move. Like, you have to do these things so stealthily. Like,
well, it's difficult to do it stealthily because the shareholders wouldn't be too pleased if you do that. The board would have to be on board with that, and so the CEO has a lot of work to try to convince them, and the shareholders themselves would also have to be on board too with buying even a small portion of Bitcoin. But it's inevitable. I mean, I haven't looked at MicroStrategy's return since buying Bitcoin, but from what I understand, they're in better shape than if they didn't do it.
Oh yeah, their stock price is up double what it was before still, even though they're down on their Bitcoin investment. But I mean, that was just that stock's a proxy for Saylor, I think, as well as Bitcoin, you know, people's confidence in him.
Oh, and just getting news that the Fed is announcing a pivot. This is according to my co-host Joey. So I'm not sure this is kind of live, and just I can't confirm anything, but this is what I'm getting. This is great news if that's the case. So
Fed and 5 other central banks announced move to boost dollar funding. Action to boost dollar liquidity with. Oh, cool. Joey, maybe you can DM me a link or something. I'm just going to pull up what I found on Twitter here.
Yeah, it's a speculator index. That's the one that he was pointing to with a picture of Yellen as the first reply.
Swap lines. Yeah, the swap line thing is really important. I forget who I read a book on that about. US dollar options have increased the frequency of 7-day maturity options from weekly to daily. More liquidity. Well,
they've increased their balance sheet.
It's all finagled. But
so they added what 200 or 300, I forget the number, $1 billion in the past week. I'm talking.
So I don't know how all this stuff works, but that was something through an overnight window. I don't think that can go back down in like a day or two. I could be wrong, but I think that's sort of like a repo thing.
That's a significant amount of money in a very short period of time. And given what's going on in the system, I mean, I'm trying to connect dots here. I think that the money printer is going to start going nuts in the next little while, and they're going to raise rates at the same time that they're going to be no more QT, more QE. It looks like. I mean, I'm just speculating. I could be wrong, but what an environment to be in. They're trying to put out the fire, but also throwing gasoline on it at the same time. This thing is just going to go nuts. And
I'm in the camp that I think, because I did like a little breakdown of the CPI thing. I think inflation could trend down for a bit. Like, I don't think we're just going to see all this liquidity rush in and then inflation ticks back up to like 9-10. I think if I was to make a bet over a year, or let's just say by December, I think inflation is going to be lower by December than it is today. Like CPI, I don't know about all like the actual stuff. Yeah. Because when you look at it, like basically every metric is dropping except for housing prices. And that's because that's like a terrible lagging indicator. But yeah, like energy, I mean, oil had a major breakdown this last week. it's disinflation for everything else, basically.
Well, it's a 12-month capture versus a 24-month capture for the CPI. And if you really want to break it down, everything after the war in Ukraine, maybe a month or two after, we'll say April-ish 2022, everything beyond that, the prices kind of stabilized with respect to oil and fuel and so forth. I mean, there's some outliers. Eggs went up like
tell my refinery that. Jerking around in BC here with the gas prices.
It's brutal in BC with respect to the price of gasoline, but the price of everything just seems to have stabilized. The supply chain issues were overcome, at least for the most part. So starting around April-ish of 2022, that's when, at least in my opinion, things kind of stabilized. So when that information is starting to get captured, then I mean, it could go down significantly. The 2% target, I don't know.
Maybe. Not going back to 2.
I mean, anything is with enough fudging of the numbers and a 12% window, anything is possible. There's been so much massaging of the numbers when it comes to respect of the employment numbers. If you look at that, every month it's hundreds of thousands of new jobs that were created, but it's not the case. If you really dig into this is massage. These are jobs that were carried over from 2022 that were not captured. They're capturing them now, and it's manipulating the numbers. It's not
and shitty ones too, like shitty jobs, part-time employment skyrocketing, right? So
yes, with all due respect to the jobs that are being created, there's so many that were lost in, we would call them desirable positions, like Twitter. And granted, a lot of them were probably stiffs, but still those jobs a lot of people probably wanted to have. Facebook or Meta, Google, Microsoft, they've all cut significant amount of jobs, and there's many, many more alongside. And these are jobs that are high paying, as I mentioned, desirable positions. Then replacing them are jobs that you're working as a waiter or a waitress or as a bartender. I mean, those are not directly correlated. I mean, you can't look at them and say an apple is an apple. It's not the case. These are apples and oranges, these jobs. And
we could go on about this. I mean, like, the other thing too is like AI is scooping up all these high paying mental task jobs as well. So that's like, it's hugely deflationary. I mean, like all tech is, right? So yeah, they're massaging the numbers. It's gross, but
that's why anything is possible with CPI. I mean,
exactly.
Take it with a grain of salt, though.
Those magic 3 letters. All right. CPI. Thanks so much, Len, for coming on. Thanks everyone for watching, and I'll be back next Friday for the regular scheduled programming.
Thank you very much.
Oh yeah, and quick last word from our sponsor. I should have played this earlier. Beaver Bitcoin. If you want a dollar cost average of Bitcoin, you want to do it quick, straight from your bank, straight in your wallet, they're dope. Take care. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com.